again, and welcome to an acysecurities educational video. My name is Alistair Schultz, and I'm going to be your host through your trading journey today. Today I want to talk about how traders make decisions and the types of traders that are actually out there. So we all know that traders make profits and losses by forming a theory about where the price is going to move up or down. However, how they test that theory is by obviously placing a trade, and there are as many ways to actually formulate that theory as there are traders out there. So it can be a little bit daunting, but luckily for us, you can break those categories down into separate groups of trading. The first approach that you would have is probably commonly known as technical trading. The technical trader will look at price and look at the data-based instruments to find out what is going to happen or formulate their theory in advance. So usually you'll be looking at indicators, support and resistance, and price patterns. Now that may incorporate looking at single bars and candlesticks, or it might incorporate looking at a whole group of them or a collective that makes price work in a pattern. When you move through that, you would tend to find that traders will tend to look for and have a preferred method of their technical trading. Some might prefer to use a moving average. Some might prefer to use a trend line. Others, like myself, tend to prefer the pattern side of things when I look at technicals from my own perspectives. However, the next way that you can use them is also in algorithmic trading and recently artificial intelligence. So in algorithmic trading, you have to remember that whatever you code that robot to do is the only thing it's going to be capable of doing. It doesn't have the eyes that we have, it doesn't have the intuition, and it certainly doesn't have that human element that allow it to know when you're in a trend or when you are in consolidation. So it's important to remember that algorithmic trading is not the be-all end-all that a lot of people market it to be. So if you do come across algorithmic trading, use them as a trading assistant, not as the trading tool itself. When it comes to the AI part, I don't want to speculate on what might happen in the future with that, but I'm sure that AI is going to be taking a big component towards it. We're already seeing artificial intelligence robots being developed, and we are looking at some big sort of bank operating projects where they are considering the ideas of using algorithmic trading and self-learning abilities of these systems to try and get better results for themselves. So we'll see more about that in the future, I'm sure, but today, it's not going to happen. The next aspect to consider is fundamental trading. Now, the fundamental trader doesn't really care where price goes. Fundamental analysis and traders that use it tend to be focusing not so much on the price chart itself, but instead the analyst will examine the underlying factors that affect price. So once they have done that, they will then form a theory about whether that instrument will become more or less valuable over time. Once that theory has been formed, it's possible to compare the theoretical view and to what it is in the current real value. Then the trader makes an assessment about it and whether the current price represents a good opportunity to enter the market or not. So in the instances of the technical trader, where they are interested in looking for a specific entry at a specific price point, we don't see that with the fundamental analysis. Fundamental analysts tend to want to look for the political events. They want to look for big news events that are going to be occurring from an economic background. We might look at the macro and the microeconomics of a certain situation. We may even consider the idea of wages and job growth and the other things and how that affects the economy as a whole. We're building a picture as a person, but also building a picture in our head on what that economy looks like to us, and then forming our ideas and our theories around where price might go using that picture to build off. The next way of trading that you find this day and age is social trading. Now, social trading is much like what you see on FinLogix. It is a platform that allows traders to talk to other traders. It allows them to share where they might be taking a position. It allows people to give you a little bit of intuition as to why they are thinking in that way. Now, social trading hasn't exactly been proven, but it also hasn't been disproven to its advantages. The issue that I find with it on my own trading is that if I'm looking at someone else's trading perspective, it might conflict with my own. In which case, will that change how I think about or wrote up or made my theory about a trade moving ahead? And if that does, is that going to cause a problem for my own trading or my own theory. Now, if that sort of thing is you're prone to have that happen, then social trading may not be the way for you to move forward. But if you like the aspects of social trading, and specifically that format where it allows you to see what other people are thinking, then by all means, you're most welcome to try it. And if it definitely works for you, then you're doing something that I haven't been able to do. So well done. The next aspect to consider is hybrid trading. So a hybrid trader is what I consider myself to be, or in this instance, I consider it rational trading. And it's the idea of using everything together in one piece. So I don't use a little bit of fundamental and a little bit of something else. It's all of it. I have to know the technical side, the fundamental side, and more specifically, the social side to a degree. But everything comes together under one house, and you have gotten experience in each aspect of these things, and you move forward with them as you travel. So you've all seen a little bit of the types of trading that are available to you, and I'd really like for you to explore all of them. Naturally, you have technical trading, your algorithmic side, fundamentals, social trading, and putting them all under one roof as a hybrid. You should explore them and see what works best for you. What necessarily works for me might not ever work for you, but what works for you may not ever work for me. So take that in the message with it. If you are to find out what works best and how you are going to make your profit out of your trading, then you need to explore and understand the different benefits and cons of each style of trading. Work out what works for you, and I'm sure you'll prosper a lot more. If you have any questions about today's content, feel free to send me a message at talk2al@acy.com. And of course, feel free to like and subscribe the video so you can get more great content from myself and ACY Securities. Have a good trading day ahead.